Hello traders, welcome back again. Today's video we are going to discuss how I trade the forex market using supply and demand zones. But before we start, just a quick disclaimer that this is my opinion and this is how I understand the market. This is not a trading advice. Please do your due diligence before taking any trades. Okay, that's out of the way. Thank you for listening. Um, so before I take any trades, I look for levels that have been manipulated. Okay. So what I tend to look for are equal highs or equal lows. So I look for equal highs mainly if I am going long. Okay. So I look for a level that the bank has used here as a consolidation level. So I look for something like this, where a level has bounced so many times, acted as a support and resistance levels, and then look for a demand zone to go long. Okay, so this is what I look for in every chart before taking a trade. So I'll show you a quick example on New Zealand Japanese yen on a daily time frame. So you can backtest this on any time frame. It's just the same thing, okay, the same process. So my equal highs are right here. So these are my equal highs. Yeah. So you need to look for a level that has acted as a support and resistance. Yeah. If you can't spot it at just one look, then there is no level. Look for another level. Look for another chart. Like it shouldn't be hard for you to spot. Okay. So as you can see, we had a touch there and we had a bounce from there. It rejected here also. Rejection, 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 and then we broke out there. Okay. And then it came back. We also broke out before it retested the level again, and then it went up. Okay. So if you look at this chart, you will clearly see where prices have been bouncing from. And if you are a support and resistance trader or a supply and demand trader, these are the areas that you'll be going short and long from. Because this right here is consolidation, isn't it? Yeah, all these are consolidation zone or level. All these are consolidation of an existing uptrend. Okay, so if you are a supply and demand trader, this right here is a supply zone. This right here is a supply zone. So when we had this push to the upside, we had a rally base drop. You can see the big drop. So if you're a supply and demand trader, once we had this push back to that level, you will go short. And when you go short, where would you put your stop loss? Above this zone right there, above the supply zone, right? And your target will be, if you've gone short there, your target certainly is that low. Yeah. So as you can see, it didn't quite actually get to that low. Yeah, so if you took a short there, you will still be on this trade. And then we had another push-ups. We then created another supply zone right there, rally base drop. And when we push back up, what happened? We sold, or the sellers came into the market to take the price down to this level again. And as you can see, when this dropped here, it didn't actually get to that level. So if this goes back, you're either, remember there are people that have sold here. I'm not sure, because this is a daily candle, I'm not sure you'll be holding your trade for months. So I'm sure you've either gone, break even, or you've taken partial profits. Yeah, because your target most likely is right there. So supply zone again, people have gone short. Where would the stop loss be? Above this level, right? And then when the price pushed up, you were certainly taken out. Yeah, and then the price then went your way without you. And as you can see, this low is still intact. We've not broken that low, which means that wherever you short, your primary target will be that low, and the price has not threatened that low. Okay, so let's keep going. And then price came back to this level again. Yeah, and this is the supply zone. Drop, base, drop. Again, you sold, maybe hoping to take a profit in these lows right there, that low right there. Yeah, what did price do? Price went back and took you out, because if you've taken that supply zone there, you've sold here, your stop is going to be above the level. You have been taken out. Okay, so that is the supply and demand traders. Then if you are a support and resistance trader, yeah, let's say for example, when this level was formed right there, you've not treated this level as a genuine resistance zone. Yeah, so that level, when that dropped down, you've not seen that. The second one, it put back up, it rejected the level. I am sure on the third touch, most traders would then eyeball this zone and trade this zone as a very genuine support and resistance area. So when this bounce dropped, a lot of people have gone short because of the rejection of the level. So they've gone short there, they've also gone short there, they've also gone short there. Yeah. And then they had this confirmation, big engulfing red candle. Most traders went short right there after this close. Yeah. And then you also have a retracement traders that also gone short here. Right? So all the short traders, all the short takers right there, where would the stop be? The stop are going to be above this level. Okay. So if you've taken any short trades anywhere around this area, your stops are going to be above this level for sure. Okay. Then when the price then came back, more support and resistance traders went short there. Yeah. What the bank do is they give you all the signals that you look for, engulfing candles. Yeah, they give you all the engulfing candles, and then you've gone short. Your stops are going to be above the previous high, above the zones. Okay, and then you have been taken out. So when all this are happening, when all these supply and demand trades are going short on a level like this, or when the spot and recent traders are going short and long on a level like this, we wait. Okay, we wait for what? We wait for a demand zone. So like I always say, we have three types of traders. The level traders are the spot and recent traders that go short on every bounce of this level. Also, supply and demand traders that take all the short trades from the supply zone on this level. So take a look at your chart. You will see what I'm telling you. When this level creates, when you see bounces from a zone or a level, I call them levels. You may choose to call them zone, or you can call them consolidation area or whatever you want to call them. But where you see your equal highs and equal lows, these are where the supply and demand traders take their trades. These are where the spot and instant traders take their trades from. Yeah, you can see them right there. So when they create these levels, the banks are creating this for what? To manipulate us, the retail traders, because they want us to go to take the trade when we're not supposed to take the trades before they take their own trades. Okay, so they are waiting for your stop losses before they can then take they'll trigger your stop loss and then take the trades and go the same way that you originally wanted to go to, you know, the way you wanted to go. Um, they then take a stop loss and then um, go the other way. Okay, so support and resistance traders, supply and demand traders have all, you know, participated in taking trades on this level. So when we broke out, we have three types of traders. Level traders are these supply and demand traders, support and resistance traders. So that's the first type. The second type of traders are the retracement traders. Yeah. So for example, people that went short here, when it retraced, people have more traders have gone short. And then the third type are the breaker traders. So when we broke out of this level, people have gone long. So if you go long on this breakout, where would the stop be? Below that level or that zone. And then we had this retracement after the breakout. More traders have gone long. Yeah, and their stops are going to be below here. So if these people have gone long here, can you see they didn't go anywhere? Market came back and took them out of the trade. Okay, so when we've seen this breakout happen after this short participation in the market, when we see this breakout happen, that's when we start looking for a trade. So let me repeat again. Once we identify these short takers right here, yeah, we do nothing because there's no trade for us to take until we break out of that level of that zone. Once we break out of that zone, that is when we start looking for a demand zone that has been created before the breakout occurred. So let me repeat one more time. When people are going short right there, right there, right there, we've not had a breakout to the upside to take them out, to take the short takers out. We had the first one right here. Okay, so when we had the first one right here, as you can see, there was no demand zone that was created. There was no demand zone that was created right there. Yeah, no demand zone that was created. Not until we then broke out again. Yeah, so once this leg occurred, that's when we start looking for our demands area that caused a breakout Yeah. So we anticipate that once the price comes back again, it will tap the demand area to push the market up. Okay. So let's identify our demand zone. So I'll zoom the chart for you. So if you look, so if you're new to supply and demand, we have two types of demand zones. Let me quickly draw that for you. So we have two types of demand zones. One of the demand zone is a rally when the price goes up and then it bases. So we have a base, we have a pause, and then we have another push up, rally ups up. So this is our demand zone. Sorry, my drawing is so bad. So this is our demand zone. So we say that when the price comes back to that zone, to look to go long. So that's the first type of demand zone. The second type of demand zone is when we have a drop to the downside, then we have a base, and then we have a push up. Yeah, so this becomes our demand zone. So what they say is when the price comes back to the zone, we go long. Okay, so this first one right here is a continuation pattern, while this one right here is a reversal pattern. Yeah, so let's say for example, we were in an uptrend, and then we then created this zone here. So and we pushed up. So if we get pullback, then you take the price, you take the trade. Okay, so those are the two types of demand zones that we have. So now, so when we had this push up, yeah, and then we broke out of the level, that's when we start looking for a long trade if we get a pullback. So on this leg, you need to identify one of those demand zones that I just explained. So right here, we had this rally, and you see the big rally up, this candle here, and then we had the pause, the base. So we had this rally, then we had a break. So we took, so there was a pause in the market, so it went sideways. Yeah, rally sideways, and then we pushed up again. Yeah, so this is our continuation pattern or continuation demand zone. Yeah, so right here is the demand zone that is a continuation type of demand zone. So all you need to do is you plot the start of the demand zone to the low of the demand zone, or from low to high, and it doesn't matter how you draw it, as long as you cover the zones. Okay, so as you can see, when we then had this push to the downside, it tapped. Sorry, kids are playing outside. So, pardon the noise. So it tapped the zone, the demand zone, as you can see. It tapped the zone, and then bingo, we pushed to the upside. You see that? So this is how I trade the supply and demand zones, or this is how I use supply and demand zones in trading the forex market. I hope this is easy to understand. Um, if it is not easy to, if you don't understand it, or if you've got any question to ask me, please do leave your comments below, and I will respond to you with your queries or any confusions. I will try my best to clarify them. Okay, so this is um this is how I do it. It's just straightforward. Okay. Um, yeah. Any questions? Let me know. Okay. All the best. And yeah, watch my previous videos. It's the same thing, the same explanations. But not all the charts look the same. They look different. But you just need to understand how to read them when you see them. Okay. All right. Take care now. Safe trades. Bye now, and see you on the next one. Take care.